Welcome everyone to today's webinar. I'm Emily Rapley with Becker's Hospital Review. We will begin today's webinar with a presentation and we'll have time at the end of the hour for a question and answer session. You may submit any questions you have throughout the webinar by typing them into your control panel in the space labeled Enter a Question for Staff and clicking Send. We look forward to hearing your questions. We will also have a series of audience polling questions during today's webinar. When we reach each poll slide, the poll question will pop up automatically on your screen. Our speakers will give a few seconds for you to select an answer from the options on your screen and click Submit. Thank you in advance for your participation. Today's session is being recorded and will be available after the event. In about a week following the webinar, we will send all registrants a copy of the presentation to the email you used to register. Please be patient as the post-webinar preparation of materials can take some time. Today's presenter will be Christian Hahn, Sales Director of Healthcare at SAP Concur. Christian is the Director of Concur's healthcare vertical for the U.S. Concur manages the employee-initiated spend platforms for over 450 healthcare providers, hundreds of payers, and 44,000 clients overall. He lives in St. Louis, Missouri. At this time, I am pleased to turn the floor over to Christian to begin today's presentation.
Thank you very much. I appreciate it. And welcome, everybody. I hope that, that this webinar is beneficial for all of you, but I do have to be a little bit selfish in that I'm going to ask for our first poll question to come up because I need your help a little bit, and I also need you to be a little bit, have a little bit of understanding today. I'm getting over a case of bronchitis, and so if you hear pauses throughout the presentation today, it's because nobody likes to literally or figuratively be coughed on, and I don't want to do that to you, and it will just be me muting my line for a moment while I do that, or taking a drink. I look forward to getting those responses back because bronchitis, I've learned, is not my friend. So anyway, let's move on. Today we're going to go over what is spend management and employee-initiated spend, the spend management solution, when to get a solution, then what, and what will you get from tracking spend. But I think it's important to start with what is employee-initiated spend. So again, this is going to be somewhat interactive. We've got, I think, at least 3 poll questions. So let's go ahead and start with the second one, which is your interpretation of employee-initiated spend. And if we could just get those answers out there, but I'll make it easy for all of you in that it's kind of everything. So as you think about employee-initiated spend, and typically how Concur does that, is it's money that's being spent on behalf of your organization, on behalf of your employees, okay? So the things that we probably think of most often would be things like conferences in healthcare. They certainly come up quite a bit. That usually involves air travel, hotels, rental cars, meals, different things like that. Those are decisions that your employees are making on behalf of your organization. Now, you probably have some rules in place, either in a T&E policy or some PDF that's buried somewhere, that puts some sort of a box or boundaries around what that is supposed to like, but generally it's the employees that are making those decisions. And those inevitably end up on an expense report somewhere, and that can be either an automated process, a very manual, laborious process, usually involving Excel spreadsheets and fistfuls of receipts, or it can be things like invoices, like non-PO invoices and PO invoices. Those tend to have a little bit more control, which we can talk about a little bit later, what that spectrum of employee-initiated spend looks like. But here's the thing, especially in healthcare, spend is a distraction. It's not a differentiator. It's never going to be the thing in healthcare. You know, the majority, if not all healthcare providers, number one is patient delivery, good outcomes, you know, better health, preventing issues, right? T&E and invoicing and things like that are never going to be something that bubbles up to be kind of the most important thing. However, we are seeing more and more organizations that, whether it's cost savings, worry about fraud or malfeasance, worry about adherence to budgets and tracking things. It is becoming more and more important, but it's always this thing that is kind of seen, probably best articulated as, yeah, it's just a pain in the neck. T&E is just a pain in the neck, and invoicing is just a pain in the neck. It takes us away from what we really want to be doing in our finance department, our AP department, our travel department. It's just this thing that's always out there, right? And then furthermore, obviously in healthcare, there's much bigger fish to fry. Typically, the things that are consuming finance executives, HR executives, IT folks, you name it, tend to be things that are more headlines that we're probably used to seeing on a day-to-day basis. It's rarely the thing that that bubbles up to the surface as the most important thing. But I will say this, in the 4.5 years that we've had this healthcare vertical, we've identified that there were certain industries that had very unique needs based on the industry that they were in of our platform, and healthcare was one of them. We have a few verticals. We have one for life science. We have one for state and local government. We have one for financial services. We have one for higher ed, and we have one for healthcare. So here's the things that we found that were the most, I'll say, nuanced as it pertains to healthcare. Number one is a non-mandate culture. Some people interpret that as doctors and physicians and surgeons and things like that are difficult to kind of shoehorn into a mandate. They tend to like to do their own thing. And so, enforcing T&E policy, enforcing the adherence to using a certain platform, and this is how you're going to get reimbursed, is sometimes met with not the happiest of folks. Mobile adoption can sometimes be difficult. Using cloud computing and apps in general. If you contrast that to, let's say, the Fortune 500, which Concur, our internal nomenclature, is the enterprise space, and that will become apparent when we walk through some graphs a little bit later on. Mobile adoption tends to be a little bit more difficult. Mileage, very interesting. So if you take a billion-dollar organization, let's say a Fortune 500 company, and you contrast that with a billion-dollar healthcare system, typically the healthcare system will do between 4 and 5 times more personal mileage than the Fortune 500 company. Now, that it seems to be that would make a lot of sense, right? Because you have home health, you have hospice, you have palliative care, you have rehabilitation, and as we all know, a lot of patient care is moving away from the big brick and mortar type hospitals that we see in cities all over the U.S. But it's leading to an incredible amount of mileage, and mileage tends to be the most frustrating and the most fraught with challenges as it pertains to the different types of line items that we see in expense. So how do we get around that? How do we get, position them for that? And how do we budget for it? And then lastly, CME budgets. A lot of organizations, they do have a stipend of some sort for CME, which is unique compared to most organizations. Maybe others might have like tuition reimbursement, but with CME, sometimes up to 50% of their spend can be attributable to CME of some sort, whether it's air, hotel, car, conference costs, things like that. And so tracking that to individual budgets at the individual level, Surgeon Jones and Dr. Smith and all of those folks, they get those annual stipends, and it can be difficult to manage that in an individual basis. So healthcare spend is very complex. And it was complex enough that even a company of our size and sophistication had to build out a team of folks that's all they deal with. So that said, most folks that come to Concur or are interested in Concur, it tends to be kind of an automation play, right? They kind of get bogged down in paper, and budgeting and managing to budgets and controlling cost is not always the first thing that they gravitate towards. It tends to be kind of the chapter 2 or the chapter 3 of their process. However, they find that just solving that problem doesn't really fix anything. It just makes the problems become apparent faster. It's easier to get to your problem, but the problem around controlling costs and managing budgets and things like that is more difficult. No, sorry, I went the wrong way there. But that said, technology and buying behaviors are changing much faster than a lot of organizations are able to adjust for. And here would be a good example of that. Here's a good way to breathe life into that. A lot of organizations will say in healthcare, you know what, we want to do better. We need to start enforcing our T&E policy. We're going to require that everybody goes through this process to travel. If you want to go do a conference, you need to submit a request for that to be approved. Don't just spend the dollars, right? And we can control costs that way. And that's a worthy effort. And there's things that you can do with our system and many, many others that can certainly help that effort. And it feels pretty simple and straightforward. However, you don't realize how daunting it is when you do try to control the routes and the ways at which people attempt to do their travel or submit their expenses. Until, if you remember last year in the Super Bowl, there was a commercial, I think it was by Marriott, it might have been Hilton, but I think it was by Marriott, that said, book directly on Marriott, get double points. So it's difficult is for you, a finance person in a healthcare organization, to combat literally Super Bowl level commercials that are saying, I will double the ante, I will make it twice as sweet for you if you will circumvent any processes that your organization has put in place and book directly on Marriott.com. And so what starts as kind of a simple exercise and feels like everybody will jump on board with this, no big deal. You quickly realize that no, that's not the case. In fact, the vendors are very aggressively trying to get people to walk around that. So I mentioned before about that employee spend management spectrum, and I think that this slide best articulates it. So here's what I mean. On the left-hand side of this spectrum is the expenses that are most problematic that we see within healthcare. And as you move to the right, they become more controllable and higher data. So really the goal beyond automation, to get to budget adherence, to get to budget predictability, to get to budget management, things like that. The goal is to push these things to the right. And the way you do that is with data. So as you can see, personal mileage, that's the most fraught, right? It's the easiest to see, it's the easiest to bend. It's we see the greatest amount of, let's say, misreported, it would be a nice way to put it, or malfeasance would probably be a more direct way to say it in personal mileage. Typical is around 18% of overstating. As you move to the right, things like cash out of pocket, that could be something as simple as a hot dog from a hot dog vendor, or a coffee, or things like that, where at least you have a receipt, but you don't have a whole lot more than that. You just, it could be handwritten, it could be real simple, whatever. With credit cards, you get, and there's a little typo there, not credit card transactions, you get a little bit more data. You certainly get more data with a corporate card, because now you're getting that level 3 data pushed into your system, where you're no longer beholden to the receipt. You actually have that transaction, the vendor, the SIC code of that vendor, the date, the location, things like that, what was purchased. As you can see, as we move further to the right, we get more rich in data, right? And the goal of our platform is the ability to push, and the majority of the products that we offer are pushing these things over and to the right. But this is really the best way to think of that employee spend management spectrum, and the way that you should think about it if you do want to do a better job of controlling for it, not only on the automation side, but then the data side. And then, that obviously that leads into a lot of different conversations around what is at risk. We have had clients come to us and say, look, just solve the paper problem. We'll deal with the other stuff. Be quiet about data for now. That's the thing. That's the migraine. And we say, okay, we can help you with that. Others say, nope, it's the data. We need a strong business case. We want to see a significant ROI. Others come to us and say, how are you going to help us with the change management of this? And then finally, typically we'll see, we're worried about potential fraud in our system. We think generally most of our folks do the right thing, but there's always those outliers that could become problematic, and we don't want to be in the news for all of the wrong reasons. So I'm going to move to this slide real quick, sorry, because it dovetails in really well to what I was just talking about as far as that adoption. So I would say that these are kind of the 5 main reasons why healthcare organizations come to us and say, this is why we're interested in Concur, right? Need to automate, too much, too little data visibility, cost management, employee satisfaction is certainly becoming paramount, especially with the demographics of healthcare employees changing quite dramatically, and then fraud mitigation. So I would say that our early adopters of Concur, and when I say early adopters, our our most tenured healthcare clients are around 13 years that have had Concur. We have a few that are in the 8 years range, but it certainly has escalated over time. We've added more in the last 5 years than the 7 years before that. So usually those early adopters, they were only looking to check like 2 of these boxes, right? That was enough. They said, no, we just need to automate. That's enough. Let's do it. We're an early adopter. And then as time progressed, maybe it had to be 2 of these, and as time progressed, it had to be a couple of more. And in the slide after this next one, I'll talk about those folks that are adopting it now. But these were kind of like since our inception, these are the reasons why people did it. Now, why didn't they do it? What was the thing that was pushing against that scale? And most of the time, it was resources. It was, fear of well, what's it going to take to implement this? Because if you use the words technology and technology and healthcare, especially as it pertains to implementation in the same sentence, it just conjures up visions of Cerner or Epic or McKesson, and those are big lifts, right? They're usually multi-year implementations that take a lot, and so it just fights against it. And so a lot of healthcare organizations that are not quite familiar with a cloud technology like ours and many others, they don't realize that it's not that. Cultural blowback and fear of change. Like I said, I can't implement this thing and have people with pitchforks and torches outside of my office saying how much they dislike it. So, we have to walk them through that. And then finally, cost. It's surprising that cost is rarely the thing. It's usually those first 2 supersede it, and cost is kind of further down the line. So as we were talking about those things that were the reasons why people ultimately did it, what we see now is more of the laggards, more of the people that are still on some sort of a manual process or maybe an outdated technology. And they've, for whatever reason, they've made a conscious effort to say, nah, this just is not a priority, and it's not been one for, 3 years, 5 years, 8 years, whatever, a long time now. And so it takes something, a very compelling event to break that cycle. The thing that we're seeing the most often now is M&A. Obviously, healthcare is experiencing a lot of that right now. And so they understand that the folks that are doing these functions and managing this process in their organization today are unable to continue to do that. And it's going to break that process and have downstream effects on budget management and on cost forecasting and things like that. And so it just breaks the amount of bandwidth that they have dedicated to this, and so they're forced into a change. Leadership change, certainly, we see that. And then, sometimes we'll see things, and Becker's is a great example. It seems like almost every week, at least, there's something where somebody is caught doing something that they shouldn't do. Maybe it's invoicing issues. We've certainly seen it in the T&E space, kickback schemes, things like that, where organizations aren't so much, it's not so much the money, it matters, but it's the PR, right? Because healthcare organizations, they tend to be pillars of both employment pillars and just, general pillars in the cities and the markets they're in, right? So, whether you live in New York or California or Colorado, right? Wherever you live, you can think of the top healthcare providers in that area, and they tend to be big employers. And the local media tends to flock towards times where they have those issues of malfeasance and put it up all over the place, and it's not a place where any healthcare organization wants to be. So as we move into this is the typical Concur life cycle. And all of these areas, they can be for months, they can be for years, and some folks, they never move beyond, let's say, adoption, right? They just never get there, they don't put the focus on it. It's really up to each organization how much of a focus they want to put on it and what kind of importance they attribute to these different things. But this is typically what the life cycle of a Concur client looks like. And I'm going to show you a couple of quotes here that are going to feel very salesy in scope, but that's not the reason that I'm putting them up. I want you to see the evolution of like first sentence to second sentence. So I actually pulled these just from our own marketing literature. But I think that this is interesting to see is people start with the automation piece. They say, fix this paper issue. And as soon as we go live, that problem goes away and it's almost like out of sight, out of mind. It becomes, all right, what's the next thing? Where's the data? How do I affect change? How do I make sure that we're in a budget? So it's like I could never worry about the budget aspect of this because I was always busy chasing paper and chasing people that did it the wrong way. I don't have to do that anymore. And now I feel like I can be a lot more effective at my job. So again, I'm not putting these up here to pitch anybody. I just think it's very interesting to see. It begins with, yeah, it's intuitive, it's mobile, it's user friendly, but actually the real win is adherence to travel policies. We can see what we book and where we're spending it. That really is what you should be attempting to do as you try to put get your arms around this. So what does that look like? Here's some interesting slides. I'm going to share some data from just kind of a mashup of all of our clients, where healthcare providers typically spend money. And for those of you that are attending this to figure out, where's my opportunities of lowest hanging fruit, these are the slides that will probably be most interesting to you. But this is a percentage of the healthcare spend and T&E and how it contrasts to what we call our enterprise segment in general. I think another way to think of this Concur ENT is just think of Fortune 500 companies, right? For-profit Fortune 500 companies. Airfare tends to be a little bit lower, obviously, than most Fortune 500 companies. That makes sense because most healthcare providers are in a pretty tight geography, whereas most large companies are all over the country and sometimes international. Lodging, interestingly, is kind of the same, which I've always thought was interesting. And as you can see, mileage is 3 times higher on average. But if you actually dig into that number, it's 5 5 times higher than most. There's just a couple of outliers in like the pharmaceutical space that that skew this number up when we add them into that bucket. One thing real quick, just to touch on too, is a lot of times these different expenses that I'm going through, they need to fall into these different silos. That, you know, whether it be for budgetary purposes for CME, tuition reimbursement, grants and endowments, we certainly see that. We even see sometimes different T&E policy because of a grant and endowment that has a stipulation in it that these dollars can only go to this, or they mustn't go for this, things like that. That's a key thing to be aware of. Here's some kind of interesting stats around airfare, and I'll let you go through. Here's the different industries and the percentage of bookings that are domestic. So as you can see, healthcare providers, with the exception of a few university-affiliated healthcare providers, they're pretty much the only ones that have international travel, and usually it's in conferences in Europe. It's almost all domestic. Tend to, you know, here's how they stack up as far as booking and how far out they typically book. These are obviously areas of very low-hanging fruit. If you want to get your arms around that spend in travel, driving this number down, it's a little bit over 20% of healthcare bookings happen 6 days or less, which you can see what the average ticket cost is and the delta there and how problematic that can be. But it is better than Fortune 500 companies. However, caveat there, a lot of times Fortune 500 companies don't have near as much of a heads up on when they need to travel. A lot of times it's the clients dictating to them, hey, we need to meet next week and Tuesday is it, be here. You know, it's not optional. Whereas, you know, conference travel and things like that tends to be much more predictable, and you can see things much further out. Airfare, here's the expenditure spend, or expensed airfare spend as a percentage of budget. Again, you would expect to see that a little bit lower than Fortune 500 companies in general, but I always like to see how the other different industries stack up. So, you know, typically here's the here's the areas that are the lowest hanging fruit as it pertains to airfare, how far out you book, direct versus indirect versus direct flights, and then the ancillary fees. This really in many ways should be the #1 focus, because it's just become such an opaque area for folks that don't have products like Concur to control for, because maybe they followed all the rules, they booked far enough out, and they booked a coach flight and everything is fine. But then when the expense report actually gets turned in, they upgraded to business class when they got there. You can buy extra miles at the kiosk. You can get into the Admirals Club section for an extra $50. These ancillary fees are really where death by 1,000 paper cuts comes as it pertains to that. We'll go through a few hotel statistics as well. Again, pretty similar is for hotel, which you would expect because of the conferences. The one thing I will say, though, that is interesting, most business travelers in this space, they're trying to get in and out pretty quickly. They tend to be same-day travelers, or at the most 24-hour travelers. Whereas in the healthcare space, they tend to have hotel stays of 3, 4, 5 days. Most of these folks are traveling just for a meeting, so either they'll go in that morning and leave that afternoon, or most often they'll go in the night before, spend the night, have a meeting, and then fly out that afternoon. It's short windows of travel, probably more frequent travel, but short windows. Whereas in healthcare, hotel is much more important, because you know, whatever that charge is and whatever charges get incurred during that stay are constantly compounding on each other because of many days that are being spent. Hotel average daily rates, right? Here's some healthcare statistics there. Hotel vendors, right? So, this is how we help you save that money. If you drive towards a particular hotel vendor, a lot of times you can negotiate embedded discounts, either all across the country if the travel is significant enough, but certainly hotels that are next door to some of your facilities or corporate offices are always excited to have some sort of a dedicated rate just for you, which again, maybe it's only $10, $15, $20, but when you start looking at the number of nights that your folks stay at those hotels, it becomes pretty significant. Again, we don't have to go through all of these ad nauseum, but just to give you an idea of what the goal should be of your program and where you should be concentrated as far as how you manage these different rates, you can do that. Here, this would be the lowest hanging fruit as far as hotel. So if you want to affect this and affect that T&E budget to the greatest degree, I would say focus in the areas as far as vendors, trends, and additional rooms fees. This would correlate very much to the ancillary fees that we talked about in airline, whether that be valet parking, overnight parking. Is the hotel 2 blocks from the airport? Why don't you just take an Uber? Why are you renting a car? Things like that, and then paying for parking. One that seems to come up quite a bit is dry cleaning, actually. Believe it or not, a lot of people get their dry cleaning done by their hotel, which is something new to me. This is an interesting one as we've seen the shift away from taxis. How much is being spent within the healthcare vertical on Uber is finally, on. It was on par in 2017, and then obviously blew past taxis moving forward, and that is a significant cost saving. So driving that behavior, while it might seem simple, what's the difference? It's pretty significant. More ground transportation areas as it contrasts to healthcare provider services versus the Fortune 500 company. We talked about mileage. The only industry that really does more mileage than healthcare is state and local government, which again makes sense. And it kind of talks to the fact that healthcare providers tend to be within a specific city or at least a pretty tight geographical area. There's a few that are multi-state, like the Providences and the HCAs and the Tenants and things like that. They're spread out over a wider swath, but most healthcare providers are pretty tight within a metropolitan area of a city. I'm just going to walk through these. I just want to be respectful of the time that we have from a Q&A standpoint, because I've gone through a lot. One of the things that I think is interesting though is to look at how long it typically takes different industries to submit their expense reports, approve their expense reports, and pay their expense reports. I think that this is really interesting within healthcare. This is probably less about budget, but more about employee satisfaction. Driving these numbers down, especially if you're in a manual environment, is critical. And these are the reasons why. If it takes you a long time to get through expense report approval, especially if you have high mileage filers, that's cash out of pocket, right? That's money that somebody's floating, and it becomes very difficult for them. And we see a correlation between organizations that take a long time to approve and then pay their expense reports, especially of those high mileage filers. If you take a long time here, you tend to have more malfeasance in your mileage, which I think is very interesting and makes a lot of sense when you think about it. And this next slide kind of articulates that, from a workflow standpoint. Here's the best ways to manage that, not only from a budgetary standpoint and cost management standpoint, but also from a employee satisfaction standpoint. Meal cost a little bit less, but that also makes sense because so many conferences and things like that tend to have like a lunch thrown in. Dinners tend to get a little bit crazy. We've seen some interesting dinners that have submitted by doctors and surgeons at conferences, but typically it's offset by the free lunch that is turned in. But I think this would be a good time to pause. There's other slides that we can go through with more data, but I think this would be a good time to pause and take some questions from the group. I don't know if we've had any come through, but hopefully you can help me out with that, and I'd be happy to answer them.
Excellent. Thank you so much, Christian. That was a fantastic presentation. So we will now begin today's question and answer session. As a quick reminder to our audience, you can submit any questions that you have by typing them into your control panel in the space labeled Enter Question for Staff and clicking Send. And we'll try to get through as many questions as we have time for today. All right, it looks like we've got a lot of great questions coming in. So the first one from an audience member who asks, how does this work with my existing accounting system?
Sure, that's a good question. So the one that we see the most, and I'm assuming like a GL ledger, is Lawson, but we see literally hundreds. And across our 44,000 clients, I don't know if there's not one that we've not seen or interfaced with. It depends on how you want to interface with it. The most common way to do it is either through an FTP drop or web services, where we're doing pushes into your system. So for instance, as these expenses are approved and paid, that creates a standard accounting extract or SAE file, and we push that into those systems. And we have a dedicated team that does all of our healthcare implementations. That's all they do. And so they've become very familiar with Oracle, obviously Lawson, we've talked about Workday, you name it. I don't think that there's any system. Great Plains is a popular one for a lot of rehabilitation companies. So you name the system, and we've integrated with it, after 21 years in business and 40,000 implementations. Absolutely.
Thank you so much for clarifying that. So we have an audience member here who would like some clarification on travel policies. So the question is, can we have different travel policies for different users, so HCPs or general employees?
Yeah, that comes up pretty often. Typically, the buckets that we see from a travel policy perspective are executive travel, international travel, if they do have any of that, just a general policy, kind of the policy that pertains to almost everyone. And then the most liberal of the policies is typically recruiting travel. So if you are courting a candidate, and you're trying to get them to move to your city to become your new chief of anesthesiology, whatever that might be, typically those travel rules get relaxed. Typically they're allowed to bring a family member or multiple family members. Usually the policy around whether alcohol is allowed to be, a glass of wine at dinner. Some organizations say absolutely not, 0. Some say one glass, but nothing beyond that. Others, there's a broad spectrum. Typically with a recruiting policy, that's relaxed quite a bit. And, after a long day at looking at houses and looking over the job, if you want to order a bottle of wine, that's going to be okay. So yes, you can have multiple policies, and almost every one of our healthcare clients has more than one policy. And we just attribute those policies based on title. So during implementation, we say what folks need to be on what policy, and that's how it's tagged.
Excellent. I think that will be helpful for a lot of our audience members. Okay, so our next question is about the timeline. So we have an audience member who asks, how long does it take to set up? And what was the turnaround time for launching?
Sure. We're able to move as fast or as slow as our clients want. And that's really the question that was just asked. So I don't know who that was, but good for you, because that is a key thing. And I talked about, the images of Lawson or McKesson or Cerner. Those are big lifts. We're not that, but what does it really look like? So as far as the build, we do all the heavy lifting. We build out the blueprint of your organization. So you typically can share with us, maybe it's in your ERP system, maybe it's in your HRIS systems, your payroll systems, maybe it's a conglomeration of all of those, kind of a mashup of all those different systems that give us, this is what our organization looks like from a hierarchy standpoint, a reporting structure standpoint, the numbers that we attribute to the different departments, labor and deliveries 1, 2, 3, 4, and whatever is 6, 7, 8, 9. We have to build all that out. We do all that. Really, all we need our clients for is to make decisions. And that's really what decides how fast we move. We had one healthcare organization up in the Bay Area. They did a full implementation of Concur very successfully in 9 weeks. We've had other organizations that were a very similar size to them that they drug out to about 10.5 months. Nothing was different. They were a very similar sized organization. They were not complex implementations. Where the second one bogged down versus the first one went quickly is they realized that they were going to have to make a lot of decisions, and those decisions kept going to committees. So here's what I mean by that. Somebody would say, hey, our current T&E policy says no more than $30 for a dinner. So within Concur, do we want to flag that as a hard stop? Like if you submit something over $30, then you just can't submit it because you've broken policy. They said, well, no, we shouldn't do that. We should just flag it as like a yellow, like, hey, the manager needs to be made aware prior to approving, but let's not stop it. Okay, well, at what point should we stop it? Like if they turn in $1,000 dinner, is that okay? No, not okay. Yes, of course. 1,000's too much. Okay, where are those thresholds? Let's take it to committee. When's the committee meet? Next month. Okay. We didn't get it on the docket this month. Let's move it to the next. Things like that slow down, right? It's how quickly an organization can make decisions like that, which determines how fast we implement. But as far as what's required of the organization, we say typically it's between 70 for most organizations, it's 70 to 110 hours all in. So that's not just one person, that's going to be spread across multiple stakeholders. Some of those folks will be in finance, some of those folks will be probably in accounts payable, some of those folks will be in IT, right? But budget for 70 to 110 hours, and typically 20 to 25% of those hours are IT hours where we build those interfaces. So, 10 to 20 hours of IT time and 70 to 110 hours total.
Perfect. Thank you so much for clarifying that. So our next question comes from an audience member who would like to know if they can require trips to be approved before they are booked.
Yeah, we do have that functionality. I didn't want to get too, I didn't want this to be salesy. I wanted it just to be, but absolutely. We have a product called Concur Request where somebody can actually go in and see the flights, hotels, and cars that they want. So it's not just kind of guessing. It's, no, this is the flight, hotel, and car that I want. And here's how much the conference is going to be. And typically, that expense report comes back at very close to what was pre-approved. And if it's outside a certain percentage window, like if it's over, like say 10% of what was approved, that's flagged and shown to the manager as, you approved $1,000, but it came back at $2,300. You might want to have a conversation.
Excellent, thank you. So this next question is about data analytics and reporting. So how is the data stored? Is it cloud-based? And also for end users, how do they access the data?
Sure. So typically we don't, most organizations, they don't want to give the analytics piece or the reporting piece, those slides where we talked about how much are we spending with Marriott? How much are we spending with American Airlines? How much are we spending with Uber, right? You don't necessarily want everybody to have that information. typically just your Concur administrators, and that can be as many people as you want, right? But usually there's kind of a select group of people in finance that are interested in that data and interested in affecting that data in a positive way. So you tell us who you want to have those permissions, and we set them up as a user that has that ability. It is all cloud-based. It's accessible on your laptop. It's accessible on your iPad, on your iPhone. It's Cognos powered, so it's very visually easy to kind of get to what you want. I mean, the amount of data granularity that we have down to individual filer status. An example would be, who are my top 10 expense filers that have spent the most, right? Who are the top, who's closest to their CME budget, to exceeding their CME budget, or who has exceeded their CME budget? Who's my top 10 there, or top 50? You can run that query as much as you want. Who takes the longest amount of time to approve expense reports? Who are my bad actors there? We have reports, how long are these folks spending with their expense report approvals? Are people just auto-approving things? So if everybody, if the same person spends an average of 1.6 seconds approving expense reports, you know that person's really not approving expense reports. They're just hitting the approve button, and they need to do a better job of managing those funds.
Excellent. So it sounds like these reports are pretty customizable, correct?
Yeah, we have a base reporting engine that has like 244 reports in it, but those reports can be combined. They can be pared down. They can be sliced and diced in a variety of ways. I don't know if there's any data that we've been asked for that we've said, well, it's just not available. It's just usually us pulling a combination of reports to deliver the data.
Got it. Thank you so much for clarifying that. So this is a good question. We have an audience member who asks, do my employees feel like this is Big Brother?
No, that's a good question. That's a really good question, and it goes back to the cultural change, right? It's usually offset by the automation piece. I mean, I guess it depends on how you define Big Brother. If you define Big Brother as people are watching me, no, that's not the case, because nobody sees anything until you submit it for approval, right? So nobody's gonna like be prying around on how you're spending your dollars. It's only those things that you say, hey, I need to be reimbursed for this by my employer. Okay, and not many people feel that that's Big Brother-ish. Now, you could broaden that and say, well, it's Big Brother for you to have a T&E policy and expect me to adhere to it. Research organizations, university-based healthcare systems, we tend to see that objection more often than other healthcare organizations. Professors and researchers, they tend to be more reticent about having any controls put around where they stay, what class of flight they book, where they eat, what they drink while they eat, things like that. I think you get the gist of where I'm going. If that's how you define Big Brother, then yes, I think that you could define that as Big Brother. But I've not met many finance executives that struggle to defend that stance, to say, no, this is not just an open coffer. You don't just get to eat anywhere you want. I'm willing to work with you. We can create a dialogue on what's reasonable, especially traveling international versus domestic, things like that. We can get there, but no, you can't just say, I don't want any rules and I'm tenured and therefore go jump. That's just not the way it works, and it's not a good steward of your finance department if you let folks get away with that. But in a manual setting, they can, and so if they've worked there a long time, there can be a little bit of cultural shift that happens there. But I'm glad somebody brought that up, because that's exactly a good way to think about that cultural change. Is usually something that gets in their way. But we've done this so many times now, we're really good at helping manage through that. And then finally, nobody likes expense reports. Nobody likes Excel spreadsheets. Nobody likes piles of receipts. When they see the automation we bring, especially on the mobile technology, ability to take a picture of a receipt and be done with your expense report because it uses OCR. It's so much easier. It's like, yep, I'm on. That I get it. You have to have rules, but this is so much better than the way I was doing expense reports before. I'm willing to jump on this bandwagon.
Absolutely. I think that convenience factor makes a lot of sense there.
Yeah, for sure.
Excellent. So we have another question here about data protection. Are there any GDPR or data privacy concerns?
Yeah, no, that's like the number one thing, especially in healthcare, that have to be. So we are GDPR compliant as of last year, and that was quite a process. We have been vetted by, I've mentioned a few of the healthcare providers that I think are some of the marquee names. We've been vetted by their IT departments and passed their IT vetting and compliance securities. We have all the major banks in the United States use us, the Department of Defense, NASA. We've been through very, very difficult and robust security protocol vetting and have passed all of those tests. And because of the nature of our platform being cloud, the protection that we have for our first client is the same one for all of them. So it's a good point, and it is important, but our security is second to none.
Excellent. Thank you so much for clarifying that, Christian. And do you have any other final thoughts today?
No, just if anybody has something specific, I would encourage them to reach out to me. I'm fairly easy to get a hold of, and we could certainly share my email. It's just christian.hahn@sap.com. Fairly easy to know, but it can feel a little daunting. But I can tell you this: my least favorite conversations are when we get a finance person or an IT executive that calls us and say, "Yeah, something went bad." And so now that was the straw that broke the camel's back. We've always talked about Concur. Now we need to do something. Whether you go with Concur or not, have something, because there's just, I would just steer you to just go through your last month of whatever daily broadcast you get from Becker's and go through and see what some of those organizations have had to deal with. Like I say, around fraud or, the mergers and trying to bring two big organizations together. It's so hard. And it's a distraction, but it's something that can't fall off the radar because it's your folks that have their dollars floating out there. And if you want to get some unhappy people, don't reimburse them for their expenses. And whether it's a whole trip or just, bagels for the team on a Friday, everybody expects to be reimbursed quickly. So.
Excellent. Well, thank you so much, Christian, for sharing your insights today. And thank you to SAP Concur for sponsoring and to our audience for participating. Please enjoy the rest of your day, and we look forward to having you join us for future webinars.
Okay, thank you.